Hello, Ghost Traders. My name is Angelique with Ghost Trades, and it is time for your March 30th market update. And March is officially over. March is historically a bit of an erratic month to begin with, without adding all of this global craziness on top of it. So come on, April, which is usually a bullish month and a less agitated month as well. Now, that being said, what a week it has been, not so much on the trading side of things, but definitely in other news fronts. The major indices hit an all-time high the week before, but this past week, which was a short week with the market closed for Good Friday, overall the market was not able to really break through to new highs, maybe a tiny bit. But for the most part, everything stuck to the respective resistance points made last week. Now, then again, when needed, we've been seeing these huge green bars out of nowhere, and then we watch the next few days as the market reacts to what they have seen on the charts. So before we get into the numbers, just in case you haven't seen, there are a few big news items for the week. First, a cargo ship rammed into one of the central support columns in the over a mile-and-a-half long Francis Scott Key Bridge in Baltimore, just before 1:30 in the morning, causing a near total collapse. A couple of the survivors have already been recovered and more people are missing. However, currently there are about 15,000 people, give or take, whose work revolves around the daily port operations and other jobs that are currently on hold. Now, this incident will take years to recover from. And it also amazes me at all the reports of this is exactly why this happened, even before any investigation whatsoever took place. Interesting. And also, after launching it in 2021, Truth Social went public under the ticker symbol DJT. So far, it's doing well. Of course, it will be a bit volatile as it gains its footing, but definitely something to keep an eye on. And I will skip the P. Diddy or whatever his name is drama that took place last week, but someone's in big trouble for doing, well, apparently what everyone already knew he was doing all along. But I won't go into that on here, but just something to check out if you care about it. Now, on to the numbers in the reports last week. On Monday, new home sales came in lower than expected at 662,000. The forecasted was 675,000. Tuesday brought us consumer confidence, which also came in lower at 104.7 instead of its forecasted 106.9. Nothing on Wednesday, but on Thursday, on the other hand, saw quite a bit with the GDP month over month coming in higher at 0.6% over its forecasted 0.4%. Final GDP quarter over quarter, which was actually the second GDP reading for Q4, changed from 3.2% and came in higher at 3.4%. Unemployment claims came in better than forecasted, 202,000, and ended up at 210,000. Pending home sales month over month, the actual was 1.6%, while the forecasted was 1.4%. Consumer sentiment jumped a bit from its forecasted 76.5 to 79.4. And finally, on Friday, the core PCE price index month over month came out exactly as expected at 0.3%. And the core PCE was up 2.8% on a 12-month basis. Now, as for next week, we have a bunch of Fed speeches scheduled. In fact, several every day of the week. So on top of all those Fed speeches, on Monday, we have the S&P Global U.S. Manufacturing PMI from March, and that will come out. We also have construction spending. Additionally, there is March's ISM Manufacturing PMI and ISM Manufacturing prices. On Tuesday, JOLTS comes out, and that's the job openings from February that'll be announced. On Wednesday, before the market opens, ADP's non-farm employment change from March. And then after the market opens, they'll announce the final services PMI, the ISM services PMI, and finally the crude oil inventories. On Thursday, this is going to bring us the initial job claims as the market opens. And finally, as soon as the market opens on Friday, the average hourly earnings month over month for March, as well as, and this is one of my favorites, the non-farm employment and March's unemployment rate will also be announced. Then consumer credit, Month over month is going to come out before the close of the market for the week. Now, again, while all these numbers are really important to watch this week, pay attention to what the Fed is saying and the meaning behind their words. Many of their talking points won't really deviate from one to the other, but once we see and once we can grasp all the information behind what they're asserting, and whether it's more hawkish or more dovish, it's going to give us a better idea as to what the FOMC decision might be in May. Now, if you're hoping for a Fed rate cut, just from what I'm seeing with all these numbers and many other factors that are simply in our faces if we're paying attention, don't hold your breath on those rate cuts. I love how the Fed talks about easing rates, but if you just look at the numbers, they're horrible. On top of all this, there's actually people out there saying that endless fiscal spending, meaning creating all these endless government programs, will actually create our supply and generate an amazing economy. According to some, this is our modern monetary theory. It amazes me what people think that we are going to subscribe to, as if we can't see reality. I guess, at least some aren't hiding it anymore. But this spending is off the rails. We are adding $1 trillion with a T, $1 trillion to our national debt every 100 days. I wish I was joking. Does nobody care about our grandchildren? The ones that, if we don't get this under control, will be the ones who pay for this insanity in so many ways. But this week would not be complete without looking into gold and silver. Now, gold hit a new high and closed the last week at $2,233. And for those who can see reality, yet another indicator of what's really happening to our dollar. Silver, on the other hand, while on the high side of its still range-bound charting, it closed this week at just under $25. Now, keep in mind, you could simply buy gold and silver, meaning the physical heavy kind that's shipped directly to you, or you could trade the ETFs. Now, as you know, we can trade with our Ghost Trades platform, and we're adding brokers all the time. So if you go on the Ghost Trade platform and you go to our charts, you can see that you can look at GLD for gold, and then you can also look at SLV for silver. And that's going to give you those numbers to where you can trade the ETFs of gold and silver as well. Again, don't discount getting some physical gold and silver in your hot little hands, putting it in your safe, and telling nobody that you have it. Not investment advice, just saying. Well, Ghost Traders, please pay attention to what's going on out there, and more importantly, about what they're not telling us. Stay healthy, stay strong, not only physically, but mentally. And pay attention and stay safe out there. Don't walk around with your face in your phone. You may not realize it yet, but this is a great time to be alive, and one that we will be talking about for many years to come. So happy Easter to all. It is a joyous day to bring renewed hope, blessings, and abundance to each and every one of you. So have a great week, Ghost Traders, and I'm going to see you in one of our live sessions. And until then, happy trading.